Now moving on to our third panel discussion, where we will be taking a closer look about the profound potential of embracing digitalization and technology to not just streamline processes in your organizations, but also to unlock fresh opportunities. So let's meet our esteemed panelists for this session. We have Mr. Tan Hausin, Managing Director and Founder of Risk.com, Sdn Berhad. And joining him, we have Mr. Edward Goh, Analytics Department, Securities Commission, Malaysia. And guiding this discussion is our moderator, Muzzaffar Othman, CEO and Executive Director of Amanah Saham Nasional Berhad. Please join me in welcoming them.
There was a very hot and heavy conversation about outlook and economics. So today we're going to talk about a bit more digitalization and how it impacts on the investors. So chill, relax, ask a lot of questions. I've got a panel here. One is Edward. Edward is from a regulator perspective. Some of the questions he'll be answering from the lens of the regulator. And then we got Mr. Tan. Mr. Tan will be answering questions from the lens of a system developer, system integrator. And then I will try to chip in from a perspective of capital market operator. So we're going to start this conversation in a simple format. If I can figure out how to switch on this one, sorry. So we're going to arrange this conversation into hindsight, insight, and foresight. What does that mean is we're going to ask about what's the past. We're going to talk about what's current. And then we're going to predict how is it going to be in the future. So just follow us through and see if you guys are okay with it. So we're going to start with a few questions, simple ones, on the hindsight perspective. So I'll ask questions to Edward from a regulator perspective. Digital age is actually ongoing for the last decade or so, and it is not actually slowing down. Correct. From a regulator perspective, what are the practices that you are adopting to ensure that you are up to speed with the investors' adoption of digitalization and technology?
Good, thank you. Thank you, Mus. Hi, morning, everyone. First, we look at, from the SC standpoint, right, Securities Commission standpoint, we've actually, currently what we're doing today is like, we're positioning ourselves right now. We are embarking into our technology analytic master plan, right? This is to position ourselves to ensure that how would we drive the technology advancement in this particular space, right? So first of all, while we are encouraging what's happening in the market, we are also deepening ourselves in this space. So therefore, we embark on this technology analytic master plan. That is from the SC perspective. So we have actually also put in a lot of internal build applications like the PLC 360 and so on and so forth. But that is from the SC standpoint, right? So from the market standpoint, what I want to bring in is like, what we have done in the past is like, back in 2020, I think the slide has actually shown earlier, that we have actually introduced something called DIM, which is the Digital Investment Management. So this is something that SC have done in the past, is like, not only us, ourselves, but it's also the product from the digital standpoint. Like if you look at from there right now, what we've seen is like number of DIM operators have actually increased from 6 to 8, right? That is the operators. Then from the asset under management, if you can see, since 2020, it's also increased up to about 1.5 billion right now at this point of time, as at 30th of June. I mean, this is the kind of statistics that we have for this point of time. If you move on to the next page, right, that will tell us that where are we in terms of the number of DIM account holders by year. These are the new accounts that was created every year. Right, so these are the data that we've gotten, and we can see the encouragement that people are moving into this space, especially the people from the below 35 years old, as well as the people from 35 to 45 years old, including myself. Thank you.
Interesting stats. Maybe I could ask a bit more. If you look at it from this perspective, right, the growth has been going from 2020, 21, 2022, especially the younger generation below 35, which is not where I am right now. You just add another 20 years to that. But do you foresee that this growth will continue from a DIM perspective? Do you see that there are a lot more new applications coming in for DIM that will actually increase the amount of unit holders or account holders in this space?
I mean, this is a good, interesting situation that we are in today. I do foresee personally this. If you look at the trend that we have seen today, we do foresee the trend was going up in the near soon, right? So in addition to that, SC also looking into other forms of what they call interesting type of products, right? So which is actually those days have to be physically in touch, but right now it can be done via online, like ECF P2P, for example. I mean, this is one way of the successful type of implementation that we have done. So instead of in the past, like just IPO and equity, we are offering other alternative at the lower space, right? At the lower margin and lower entrance fees, for example, for the investors. So therefore, this is an encouragement. Thank you, Mus.
So basically, the kind of current market, there are people who buy direct. So this is where people goes dim. And then there's always the agency model where some of you guys are actually part of the industry from a direct to consumer perspective. So this is an interesting, I'm still monitoring this because I am part of the unit holders, some of these DIMs. I'm just testing it out, see how it works out. So Mr. Tan, coming on your side, as a system person, the guy who develops systems for your client, in the day and age of DIMs, in the day and age of digitalization, how are you helping your clients? How are you adapting to that?
Can you hear me? Yeah. Let me start with the pandemic. The pandemic was a game changer, a seismic switch that happens not only in our industry, but it actually has a big change in the industry. What happens before the pandemic? I'll give you a bit of history. When I started doing system, one of the things, my uncompromising goal is that I do not want to visit my client. It takes me 1 hour to travel there and 1 hour to travel back. All services must be done off-site. So we do everything to develop the system to make sure we have a good error correction routine that we can just call them up and say, do this and you'll be correct, to have diagnostic routine and to have the ability to communicate with the client so that we don't have to visit them. You imagine you have visited a client, you can at most service 2 clients in a day. I can service 10 clients in a day if I don't have to visit. So we had that policy more than 10 years before the pandemic. So we have been developing what we call is almost a digital format of servicing, that is no physical presence to service a client. Okay, so what happens was we had to negotiate hard with the IT. The IT is a silo. We say we want to come in and service you via internet. Cannot, because it's a security risk. So we have to negotiate all that and see how we come about it. But when the pandemic comes, they cannot say cannot because they have no choice. Everybody has to work from home. People have to open up. So it became a different mindset. We implemented 2 major systems, 2 major core systems during the pandemic without physical contact with the client. That was a big change. So when you look at the traditional fund manager and the new digital fund manager, the traditional fund manager are going digital as well. And they can do digital in a big way because they have a big establishment. So one of the biggest problems with fund management today is actually their core operation. Everybody outsources their fund accounting, outsources their back office. When you outsource means you fail to resolve the problem using technology. You pass your problem to a cheaper country like India to do it. So when we go to digital servicing, we are doing all the things that the fund manager needs. So actually what we have done is digitalize the core operation of a traditional fund manager so the errors doesn't happen. when they need 40 or 50 people to do their fund accounting, unit pricing, and all the errors, actually the error rate is very high in the industry, and nobody knows it because nobody has the data to check it out. So when we do that, you can actually wipe out, in the big company, 30, 40 staff, okay? That is my biggest problem at the moment. You take my system, you have to really find jobs for 30 or 40 people. So the traditional manager, now I'm talking about past pandemic, now I'm talking about current, the traditional manager can digitize their operations, and they will need to, I'll explain later in the future why they need to, because we are going into an era where, whether it's online mall or anything, where you have to be able to not just take the rich end of business, not taking the 100,000, 200,000 as an investor. You have to take the smaller amount, and the bigger, richer market, there's more difficult to tap. And if you are not digitalized, you will be left behind. So the traditional managers are going that way. Everybody is going to digital their client onboarding. So that's where it's going. So we digitalized just by accident, because we did not want to be, we believe the physical presence, physical paper form, physical presence, physical eyeball to do things, physical hand to do things is the limitation. And we have been working at that in the last 15 years, and we have digitalized the back office operations of a fund management company.
Thank you, Mr. Tan. Basically, I have a couple of follow-up questions. So what happened to the colleagues of ours that is no longer needed for because we digitalize it and automate it? How do we actually help them move? Do we actually reskill them? Or do they actually find some other new ways to actually contribute towards the organization? That's question number one. Question number two, now that we are coming back together like this, meeting everybody, shaking hands and exchanging flus sometimes, unfortunately, as you can see, my nose is a bit bad. So how does that progress further now with your client, now that things are going back to normal?
Honestly, I don't know how to answer question number one. You know, you're putting a lot of people out of work, but then you have to manage it in a way where you grow and keep them on. But one of the things, actually one of the very important things was in 2018, I decided that we will only work 4 days. Because all this email, all this innovation and productivity that comes the way has actually made your job so much easier. Why are you still working 5 days? Why can't we do it 4 days? And I've never seen people more happy with staff benefit than the 4 days. They don't have to come in on Friday, 2-day travel. So Friday is an off day for us. And because of digitization, this is a 5 days business environment. We can work 4 days because I say, if I give you 4 days, you must support the client from home on a Friday. And everybody agreed. Everybody was so happy. I've never seen people so happy in my life, you know. So for 5 years, we have been doing 4 days. And then the pandemic came along. When the pandemic came along, we have been already supporting staff, things from offsite for so long. It wasn't a game changer for us. So now, we don't have to negotiate with the client to say, we are not coming in. We don't come in, and they don't bother now. My IT head is in Batu Pahat. He's serving people from Batu Pahat. Another one is in Ipoh. He's serving people from Ipoh. So that is how we have to go. And that is the direction a fund manager has to go. But there is a lot of, resistance to change. It's a big job to change the core operation of it. One of the things is, what do you do with all the people that lost the job? I have no answer for that. But other than that, to say, maybe give your staff 4 days work week. I think that's a good idea, you know.
Thank you. I hear some clapping at the back. Maybe after this, we ask for 3 working days and 2 days from home. And after that, we proceed towards the reverse. Yeah, but as a supervisor, I have a problem with that as well. So we can have a very long conversation on that. So I think Mr. Tan gave you a color towards what his clients, which is the banks, the investment UTSCs type of people. Maybe I can give a bit color on the customer journey. I find that during the pandemic, my customer moved from going to branches to digital. And it forces a lot of technology development at the back end to absorb a lot of volume coming in from these customers. And we are also having to develop a way to answer questions remotely because, you know, they ask questions, they are home, while watching Netflix, they also do investment. So that's a change from my customer's perspective, right? So we look at that from a end-to-end perspective. So we got a view from regulator, we got a view from the system provider, and then there's a customer view that we also have to look at. So Edward, following back in the past, when SC was moving towards digitalization and transformation, any initiatives that you think, I know DIMs are going up, but any new initiatives from the SC perspective that you think we could highlight in terms of how we're going to regulate the market or monitor the market or grow the market in any perspective? Any thoughts on that?
So SC do not just look at ourselves alone. So while we are embarking on the technology analytic master plan for us internally, how do we galvanize the data in the single location, allow us to do more analysis internally, right? We're also looking into the external view as well. So I do not know if everyone is aware that SC is also encouraging our intermediaries to embark into a digital, what they call journey along with us, right? So through these digital innovation funds as well. This is to encourage our intermediaries to come in. So if you qualify, for example, you can then come in and apply for the funds, right? So I'll try to put it in here as well. So this is Digit Fund. So it's actually it's an innovation fund that was established from the Belajawan coup back in 2023. So this is up and running. The idea behind is very simple. We want everyone to be on the digital journey just like us, so such that all of us can come in together. Then a happy you and is a happy us as well. Thanks.
Thanks, David. So who can apply for this? Is it like individuals or licensed organization or organization that's trying to get the license, or is it open to everybody?
This is only open for our intermediaries. I mean, I presume that many of you guys are part of the intermediaries that is actually regulated by SC. There are certain clause and what they call conditions as well. Do visit the Digit website that's available in SC website, the microsite of SC, to give you more information pertaining to that. So they are. So mostly that we want our intermediaries to partner with the service provider, probably like Mr. Tan, for example, to come in together and seek for fundings on this. So this application period is already open from 1st of January until funds are fully utilized. If I can remember, up to date, we have actually disbursed about 2.6 million for about 5 to 6 what they call intermediaries have already successfully gotten the grant from SC via this fund. Thanks.
Thank you. So it's still money there if you guys are interested to actually request from SC. Normally SC asks for a lot of information. Now you can ask for a lot of money from SC moving forward.
Yeah, but if it's an AI related, for example, we are even more encouraging than that on AI space as well. Thanks.
There you go. A good segue to the current situation, talking about AI. From a regulator perspective, what is your view on how to collaborate with the industry, other than using Digit? This is one way of doing it. How you collaborate with the industry, specifically on AI, actually to either stay compliant or as part of monitoring? Is there plans? What are the thoughts from SC on their side?
So in the past, I mean, in the near future, we're going to do the same as well for this at this point in time. As I said earlier, when we started the transformation journey, we have also started the data submission via ComRep. So this is one way for us to be encouraging the digitalization from the industry. We started this very early back in 2018, and we can really see the benefit during the pandemic period. So that, I mean, we would have to work from home as well at that point of time. So therefore, the submission via these electronic journeys has been very successful and very encouraging for us as well. We do have submission via emails as well, but we are hoping that we are embarking on this journey together into digitalization formats. Thanks.
Thank you. So if you guys are not aware, there's a lot of industry talk about generative AI. What does that mean is a normal report from Power BI will tell you exactly what the number says, but from a generative AI definition is its ability to create stories for you, to create content, to create pictures for you. So that's what I meant by generative AI. But I think that's a technology that's up and coming these days, and I think as a regulator, they are actually looking at it in a serious manner. But from a system provider, Mr. Tan, what are your thoughts on these newer technologies, and how will that impact on the industry moving forward?
For a starter, when you talk about system, one of the most important development phase of a system is AI will become like a word processor. It doesn't need experts, big database or big complex project for you to access AI. You'll be like a word processor, like email. So because it has gone that way, it's going to move very, very quickly, and you'll be surprised on how much usage there will be. Some of our programmers are already using AI to do the programming, and the code come up to be very good. You need only to do a little change. But the most difficult question about AI is the need for control. What are the guidelines you put in for AI? AI can be so massively powerful. It can do massive damage to the society if you do not control it well. So it's a big debate on, okay, the central government must put a strong guideline on AI, like in China they have done, and in other countries they are following. I just imagine, okay, you have a chat box AI that's very smart. You go up to that chat box. He scam you. He knows how to read the emotion. He scam you, and you make all the bad investment. But the company who put it up has slanted the AI to get as much money out of you as possible. So AI is more powerful than you. Do you want that to happen? So these are the things that we have to be careful about, what AI can do and how we control it. So far, we haven't got any requests for AI thing. Maybe the chat box, I think the chat box will not be that dominant, because now the method of assessing need is quite sufficient, and the AI, generative AI need to get a lot of data. Unless your chat box can keep the person online and get a lot of information and collect a lot of information over time, then the generative AI can give you more useful information. There's no reason for a company to invest in AI if you can get it on ChatGPT. It's going to be so powerful. It's become like a word processor. You don't have to buy a special system for it. That's my thought. So I'm not going to go that area because I cannot charge my client. They can get something for free. How can I charge my client? Okay.
Yep. Well, good point. From just your view, if suddenly your client decided, I want to introduce some sort of a AI insight, either for transaction monitoring or investment monitoring and stuff like that, what would you think would be the impediment for this kind of implementation for the industry?
If they want something, they got the money for it, there's no impediment. If I don't want to do it, I ask Cyber Village to do it.
Okay. So generally speaking, I think the adoption of generative AI is something that we all have to embrace. Perhaps I could share a bit more on what my organization is currently doing. So I'm actually quote unquote cheating, not cheating in a bad way, cheating in a good way. So you would imagine that you are sitting in a meeting in Teams for 1 hour, right? So we started the meeting at 9 o'clock. By 10 o'clock, the meeting is still ongoing, and sometimes you figure out, what did we talk about the last 1 hour? So we are testing Copilot, Microsoft Copilot. So what I did was I just typed into my chat and asked, please summarize for me for the last 1 hour what's happening. So the Microsoft actually gives me a lot of views, so I look a bit smarter when I go like, but wait, I can ask questions 1 hour before. So to me, the generative AI helps me personally to actually start being a bit more quote-unquote smarter, right? So I just want to tell you guys, I use the tool almost every day. Whenever I don't have anything to do, I just ask stupid questions and see what they come up with. And that's kind of interesting thing to do. And I think from an industry perspective, we should not discount the power of such AI, because if you're looking at your clients are using AI, and you as an advisor as well, intermediaries as well, needs to use some kind of tools to help you run your business. So I mean, so that's the current thing right now. You know, everything's going into AI. Everybody wants to have everything.
Just let me add. The question in an investment management, the question you ask will be asked by 10,000 or 100,000 other person, and the answer will be such that the market will be very efficient. You'll not get anything extra from the AI. Okay. So to get anything extra from AI, you have to do something different. Okay. For example, looking at satellite images of how much light are there on Earth to give you an indication whether is a recession coming or economic boom, or looking at satellite images of how much oil palm plantation has been planted in the last 10 years or 5 years to predict the value of oil palm. So those are you have to go much further in to get value out of the AI.
Yeah, I agree. I think we just need more information for the AI to generate more insights for us as a user. From a regulator perspective, a lot of companies are using AI, like it or not. Either they're doing transaction monitoring, they're using investment monitoring, they're doing compliance. Any thoughts on the SC to either control the use of such tools or encourage the use of such tools? Or what are thoughts from the SC side with a lot of people that are using the AI, especially when some of this can be used to provide advisory, can be used. Even though they're not licensed, the AI is not licensed, the person who's using the AI has to be licensed. Any thoughts of views on this?
From SC standpoint, we encourage, for example, right? So but encourage and use with care, for example, right? Gunakan was. So you see what happened was like, and back in August this year, our SC has also released out guidelines on the technology risk management. So this is on what are the do and don'ts, right? For example, from the technology standpoint. But if you look at one of the section, there is something on AI. We are definitely aware that this can be a black box. There can be a biasness into it. For example, especially you feed in the information into AI, the AI will then eventually will tell you that something that which is not true, for example, right? So we have put in some principles around it. For example, accountability is one of the principles to ensure that the intermediaries or the person who's actually coding on the what they call the AI program that you do has to be accountable to what you do. That is one on accountability. Second one is on the transparency, right? So you have to be transparent what you are doing. The third one is on fairness. This is to ensure there is no biasness between gender, between what they call age group and so on and so forth, for example. And then last one is on practical accuracy and also reliability. So therefore, what practical accuracies comes in as in place is like, if you do one time, we give you one result. If you go 2 times, 3 times, make sure that the range are within the parameters to ensure that this is something that is robust. that you can actually go up to the market and use it. So in short, Moose, right, we do encourage, but let's handle with care. This is something, it is really a black box for those of us who do not know. So for us internally in SC, when we do our analysis or analytics internally, right, we will spend a lot of time doing literature reviews on what's happened in other markets, what happens in other universities as well, through the literature review. Then from the literature review, we will find out that what are the mathematical algorithms that we should be used for us to match the outcome that we wanted to see. For example, if we want to find the nearest location or the nearest relationship between two parties, they must be substantiated by, let's say, no next neighbor algorithm, for example. So as simple as that. This is to ensure that it doesn't turn out into a black box. So from SC standpoint, we do pour in some guidelines. Let's follow and let's adhere to the guidelines to ensure that it's a better world. Because AI, if it's not being used correctly, it can be a monster. Yep. Thanks.
Yep. Thanks, Edward. So in a short summary, regulator believe that this is a good tool, use it. However, I think we already have the technology risk framework that has been introduced recently and supposed to be adopted by the industry by this December. There was a lot of documents for us to read, but it is actually to ensure that all the tools that we are using are adhered to based on certain requirements of the regulators. But like Mr. Tan was saying, maybe from a country perspective, another framework about AI, about the morality, perhaps, that is not being touched. I mean, regulators talking about consistency, accuracy, but the other side of it is about morality of such decisions when we go forward. So this is segue to the conversation about the future. Now, in your opinion, Mr. Tan, what domain that will provide the best return in digitalization and AI wave in the future? What domain do you think will create more benefit to the industry?
Basically, when you see this digital transformation, what it does is that it allows any businesses to handle 10 times the volume that they normally handle. So basically, a fund manager would not want to wait until this guy become a tauke before he is a client. So when he is young and upcoming, having some saving, you catch him there. So when you want to catch him there, you want to catch a lot of these young people. So you have to do volumes. You have to go down and be able to do volumes. So that is where they have to focus on how to do volumes, how to digitize. Now all fund managers are doing digital client onboarding. So no more paper form. Like insurance company have virtually moved away from paper form. There's one major change in digitization that happens among the traditional, the big banks, the big established fund managers. They're not going to sit idly by to see all these new licensed digital fund manager coming up, grabbing the client. In fact, one Singapore bank, these CEOs tell me, my chairman in Singapore cannot understand how you are a big company being worth less than IFAS, you know? So what can we do? We want to catch up with IFAS, you know? So they are all looking in that direction because that is where they have to go. They have to catch the client early.
Yeah, thank you. It makes sense because from a customer journey, there is onboarding. If you're not a client yet, how you onboard. And then there is managing their money once they're onboarded. And then
the
also,
whole operation.
Correct.
Go down the chain, you need to be able to handle volume.
Correct. And then when they decide to actually seek for advice, then this is another way where we could look at it from digitalization perspective. And then at some point in time, your client might want to retire or want to give their money away to their kids because they're getting old. So that is an offboarding process that we also need to start thinking about from a customer journey perspective. So I think there's multiple segments of customer journey that we could actually use such digitalization moving forward. And I believe personally, for people like me, I'm generally fully digital. If I ever could do everything else before I die, I just press a button and then all my money goes to my kids and every house. That would be like the best deal. You know, it's like, but right now we still need people to advise, sign a letter, you know, wasiat ke, whatever it is, your will, right? So my ideal state moving forward, right? On my deathbed, before I die, a few minutes before I die, I know it's a bad conversation, but the fact is I just put my thumbprint onto my phone and then all my money moves. Right, all my money moves. Now, I don't know what regulators are going to say about this, but that's for me, right? So,
Okay, for personal standpoint, I share my account number.
You know, Singapore was very active in developing their living trust. That is what solved this dumping problem, because they want to catch these people that pass on their money. Also, so the living trust, but Singapore is the exception. They take everybody, rich people all over the world, to come and set up a living trust there, so they can make a lot of money out of them. Okay, but that is where the asset manager will. Now, some of my clients, they're setting up private trust just because they are going to catch the money. They don't want the money to leave them. They're going to catch the money when after you die, they still are interested in you.
yep, they're interested in the kids, right? So the kids, so that the kids' money is still inside that particular asset. Anyway, so I know it's talking about a bit more negative sensitivity question, but let's go back to the future. Now, there's a lot of scam. My pictures have been used in Facebook for scamming. They said, put 3,000, you get 30,000 in half an hour or something like that. So this is like, you know, these scams are all ongoing every day on every channel. So just my view, Mr. Tan, on your side, how do you think we can assist to educate investors and to protect investors in this digital age where reaching out to everybody via Facebook and social media is so easy, as opposed to in the past they have to take a newspaper article and blah, blah, blah. But now it's like they can create those content in 30 seconds with AI, Gen AI, and then they can post it to everybody's Facebook, and then there will be vulnerable investors who look at it, 3,000 become 30,000 in 3. How do you think we should educate?
It's really sad to hear somebody lose $2 million, their lifetime saving, an old lady do that. It's very, very sad, but you cannot, it's hard to reach out to those people not to be scammed. But I think what is very, 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 very important in our age is to have in the high school or even in the primary school a subject to teach people about what they should learn from the internet and what they shouldn't pick from the internet. I think this is so, so important, because the internet is a place of so much disinformation, so much hatred, so much rubbish there. So I think that has to start at the school level. I often get people, educated people, come to ask me, what is this good investment, Geneva Gold and all that other thing. I say, first thing, why don't you look up the net about this company, what they're doing? And they look up the net, but when you check these people, you don't check their website. Their website is all golden and good. You check who are the people behind it, and then you put the name into Google. You'll be surprised how many past cases and bank negara has been after these people. They are the same people doing the same scam again and again. So you have to go and look for the people who are behind this scheme, not go into their official website. So that is one thing. The other thing is there are many apps that are out there to tell you which phone call is a scam. It's just too many. You just can't just stop all this scam. Recently, when I tried to register for online banking, I couldn't. And when I went to the bank, you know what I found? Somebody else has opened an account using my phone number. And then the lady said, this is a typo. I said, no, this is not a typo. You tell your senior management, check out whether there's a scam. It cannot be a typo. I had this bank, this phone number for 20 years. How could somebody else have the phone number? It's really scary sometimes.
Yeah, so I guess that's on a personal experience perspective. You're right. So I guess that what Mr. Tan is trying to say is, number one, we need to educate ourselves first. And our children, I guess, from schools. And there are a lot of programs currently run by Bank Negara and SC in terms of educating people how are we going to actually tell people between scam or not scam. However, my view is this: greed can blind you. So you can read whatever you want, but when you feel like, hey, this is true lah, 3,000 become 30,000, right? In 30 seconds, for example, whatever number lah. So it's a new program, 30, 30, 30, 3, 30, 30 anyway. So people get blinded and they might have a problem differentiating reality against scam. So education is important, I agree with you. From a regulator perspective, Edward, what are the stuff that you think we could do more, or what regulators are going to do more in the future to help educate the investors and protect these investors from such misinformation? I call it misinformation. It is also true that intermediaries sometimes, especially their sales guys, do add garam and gula sikit lah when they start to have a conversation, right? On that, misinformation is one thing, but the other side of misinformation about the scam as well. Any thoughts and views from a regulator perspective?
Thanks, Mus. Thanks again. So from SC and also I personally take this very seriously. So from SC standpoint, we already have this in our website, which is the investor alert list, right? So which everyone can go in and check and find out at any time you wish on the investor alert list. So that is one steps. Internally, SC is also have a unit that is actually supervising the unlicensed activities. This is how SC responding to it. Then this information will then be channeled into the investor list so the investor alert list comes in from the public tip-off and also the kind of research and works done by our internal team, which is the supervisory of unlicensed activities. So this is from SC's new things that we are doing lately. In the past, our consumer investors office has always been propagating Invest Smart, right? To share with all of you that what are the do and don'ts, for example. I think what Mus said earlier is true lah. I think greediness is one of the key elements that drive people to it. And then another probably state of mind is I've actually lost something, so let me get back my capital, then I'll get it off. But guess what? You can never get back your capital, because the more you get in there, the deeper they will delve in. So in short, in a very simple way to say, if it's too good to be true, then it's not true. Correct? Thanks.
That's true. So if you have any questions, you can put it there. I think we have some time. So I thought we're going to share with you one more experience that we saw as an industry perspective. So with the age of digitalization, a lot of people transact via the phone. So what we discovered from my organization, we've got a system at the back end that tracks fraud. Well, try to track fraud as much as we can. So there was an example of where one of our clients actually just downloaded an app. Normally the downloaded apps come from WhatsApp and they allow you to download, right? So the app's actually tracking your username and password. They are actually keyloggers. So they copy all those information and then they send via email to somebody else. So what will happen is a caller will call this lady and says, you know what, your account has been hacked and you need to go to the bank, take out your money from the unit trust, because my agent is banks, right? So we detected that quite early at that stage. However, it is also partly a communication where we need to talk to our agents to tell them, hey, listen, Mr. A is coming to your bank. I don't know which branch that he's going to go. He's coming to your bank. He's going to take out money. Because we saw this app on his phone that actually stealing information about all his other banks, and especially on our app as well. We saw that running behind. So as much as there are technology behind detecting who's playing around with your phone, the other part is that the ability for us to communicate properly to our partners. So in this case, there are two cases. One case, we managed to save a few 100,000 from this guy who was asked to take out their investment from our funds and dump into his account. And just remember, right, what the scammer has is two passwords for two accounts. One is unit trust password account, and the second one is his banking credentials as well. So what he's asking that person to do is take out money from unit trust, put in his bank account. The moment he see the money in the bank account, he sapu all into a different account. So that's a kind of sophisticated scam that people are making. So from an industry perspective, there are a lot of technologies that we detected, new apps. We even saw IPs, multiple IPs coming in for one user. We even see that 5 users sharing one IP. We also see 5 phones being used to access one account. So there are a lot of technologies behind it. There's not really a AI type of conversation, but at the end of the day, the investor themselves that did the transaction legally, they are legally take out the money. They are right to take out the money. They legally put their money into their own account, which is right. Unfortunately, somebody have access to their bank account. That's why the money went out from their bank account. So I think at the end of the day, educating people is very, very important. Having technology, also very important. But the problem that we face is the people itself. You can have all the defense, all the hardwares, all the technologies, but if the investor themselves are too vulnerable to certain cohesion, influence to do certain things, it's very difficult. So for us, the key word is educating all our clients, educating all our friends and families and kids, not to be too pushed. Just chill, think about it, is it true or not, when people start calling. So I thought I'd just share some of those experience that we saw from the industry. One guy, we saved 100, the other auntie, I cannot save, $30,000 went out to her account and it went out immediately. So that becomes a scam area. So we do have 15 minutes, and I don't know if you have any questions because I don't have the view right now. But if you have any questions that's not on the Slido, you could actually raise your hand and shout it out if you can do many. Oh, there is. This is where technology comes into play. All right, so there's a few questions. Let me see if I could get one for Edward. So Edward, there's a question for you. For SC, do you see regulatory functions to be AI-driven one day? Any part of regulatory functions that are already being done by AI? Good question.
I do not see that regulatory function driven only by AI one day. Solely by AI, I don't think so. But today, regulatory functions are already done by AI. I would say a subset of AI through machine learning, for example. We don't use what they call, so machine learnings will give us the kind of beyond descriptive, which is the prescriptive and also the predictive type of analysis. From there, we will then make the judgment internally and then take the necessary, what they call decision making out of that. So today, we already started using AI, a part of AI using machine learning, but not the AI function itself. So not someone mimicking a human to do the judgment, but the analysis that we derive are using the machine learnings. So we already started that. Thanks.
Thanks, Edward. Mr. Tan, there's a question for you down there. One area not being looked is corporate digital onboarding.
Oh, the fund managers are already doing it, the corporate onboarding. It's less lucrative area because they don't get that many corporate clients, so they don't mind filling paper form now and again. So, but for one of my clients, corporate onboarding is part of the function. One of the big problem with corporate onboarding is that with normal onboarding, you can almost scan all the documents and store it. With corporate onboarding, there are more documents, there are M&A and all that, a little bit more involved in storing. But it's coming that way, there's no doubt about that. Okay, and then the other question on whether the agency model will still survive. Basically, a lot of product has to be sold. Even though the younger guy may choose to do their investment using online app, But I think when they become tauke, they won't want to do that, you know. They just want to sit back and let somebody help them, and they want to go up the scale in different product. And now the agency models, they don't only sell unit trust, they sell insurance and everything else. So they have long-term trailer commission. So I think the model will still survive.
Yeah, I tend to agree with you, Mr. Tan, because they cannot actually replace human 100%. The AI is another tool that's used by the human to provide advisory moving forward. But we have to be very clear that the decisions by the AI should not overtake the decisions of a human. It just act as another input for you to make that decisions. So there's another question here about what are the risks of AI replacing humans in the financial investment world? This is the conversation that we had today from both operation and sales trading perspective. Anybody wants to answer that?
Let me try to take it on. So they are definitely I would not say that AI will take over a human world, right? Human work at this point of time. There are definitely some works being taken away, like the mundane tasks, right? So we wanted to use AI to do the heavy lifting. So I give you some example. Even internally in SC, people go through a lot of documentations and so on and so forth, right? So we use AI today. Now we are moving towards the large language model, which is generative AI, to help us to siphon out the what they call insights from the information. From the Web 2.0 have given us how derive the information from the data, right? So now Web 3.0 using AI will help us to derive insights from the informations. So data goes into informations, information goes to insights. So this will help us to do more different type of works. So a more decision-making works can be done by human. Unless one day when a better AI comes in the future, right, that we do not know. But at this point of time, it is not yet. Thanks.
Okay. Basically, you have to look at how Google changed the way we work. With Google, you need more skillful staff. If you have enough skill to choose the information from Google, you are very valuable. If you don't have the skill, so you need more skillful staff, and they can do more. It's the same like AI. You end up needing less people, but more skillful people who know how to leverage on the AI. So there will be better for people who are more skillful. That means you're going to employ people, you have to get the best people. So it shifts the thing to that where skill is more important than quantity.
Yep, understood. So in short, it's a long way to go, but it's a journey that I think within our lifetime it might happen. Some of you guys are very young, some of you guys are very, very old. So we'll see how it works out from there. So we'll take another question at the bottom there. There was a question about how the unit trust industry is going to cater for the IT savvy customers. So maybe I could answer that question from a practitioner perspective. So what we saw was the younger ones like to engage us digitally. The older ones, 50 and above, still wants to see our counter. So they are always preferred channel by each of the unit holder. Yeah, so it is still okay. I think they will never replace. But for the IT savvy people, I think if you look at the proliferation of DIMMs, that means it goes straight forward from do it yourself, which is you come to our website and go buy and sell on your own, into an advisory, which is one level higher, where you come in and you tell them, these are my questions that I answer, and then they tell you these are your risks, and then they tell you these are the portfolios that you should have. So this is what the DIMMs are doing today. So there are various avenues for each type of people coming in, and they will be catered to. I don't think there'll be one day where we close shop and start doing full digital. There will be younger generation who become 50s in the next 30 years, and at some point in time they are very bored at home and they want to see people, they go to the over-the-counter.
Okay, can I take up the question on centralized AMLA procedures by government or regulators? You think Maybank or the bigger bank will want to share their client data with anybody else? This is very valuable. So this idea of centralized one is like sharing your wealth with everybody. No, it will never work. Client data are the valuable resources of a bank. Who will want to share it? So the idea of centralized data for AMLA will never fly.
Okay. I mean, it is pro and cons for sharing data. Sometimes bank doesn't want to share their own customers' data. So it's a very difficult conversation. But from a regulator perspective, they may be able to actually consolidate moving forward so that it will protect certain investors and as well as U2SCs, because if they are the ones who are using the data and not able to see what other guys see, and you're onboarded and they are partly on terrorist list or some blacklist, then you have a problem with your license. But there's actually a 7 thumbs up questions, which is I'm going to address it. We have seen apps and online facilities replace many remisiers for share trading. Will we see the same for unit trusts, where UTSCs will be replaced by apps? I'm opening up to both of you guys before I answer it.
Mr. Tan, you want any views on that?
I don't think there's immediate danger, but there'll be a gradual shift. That means the normal agent will have a new competitor, but it's not something that will push them out of business. That means you just have a new competitors, that's all.
Yeah, similarly, right? I do think that there are certain markets of the target market that all of us are going for example, would have a different preference in actually adopting their transactions. So like Mr. Tan say, right, it's actually open for competitions between the channels, for example. There will be alternative channels for this group of investors and so on and so forth.
Yeah, so this is my view. There are DIMs already today. So the question is, will they replace? They have already replaced some of this. DIMs means they are no longer advisor. You're going to the, I'm not going to promote any one of my competitors, but you go on and take a look. There are apps that actually allows you to invest without meeting up people today already. So that's why the DIM licenses have been increasing. So that's already existing. So it's not about will they replace. But there are also segments who needs kind of advisory from the people that you kind of trust. And this information are not available to the DIMs because DIMs is asking you 20 questions and give you a risk. When you have a financial advisor, then they could actually say, oh, you got 2 kids. The DIMs doesn't know you got 2 kids.
Not yet.
Not yet. No, someday they will with generative AI, but not yet, right? So if the advisor says, hey, you got 2 kids, your 2 kids is actually Form 5, Form 6, so that means your kids in the next couple of years is going to go to college. Maybe it's about time for you to invest on certain things. So those will not be able to be replaced today yet, unless you tell Google or somebody that I've got 5 kids and all of them are at this age, which is highly unlikely we're going to share that information. So I think there will still be space for normal advisory, but definitely the younger generations like my kids, they don't want to see people. They just don't want to talk to people. They trust the phones more than anything else. So that's a short answer to that.
Yeah, if I can add on, for example, what the IM has today, which the AI or the other space do not have, is the ability to build relationship with the clients. So that is something that AI can't take away for now, right? So the relationship building that we have done and that you're going to do today for tomorrow, it will come in very handy, especially on the bigger investments, right? So for small investment, they may go to alternative channel, for example. For bigger investment, that's the relationship building comes in very importantly. Thanks.
Yeah. Okay, so we got one last question because we got 2 more minutes before we have to wrap up. There's a question about what emerging trends in digitalization and technology do you believe will have the most significant impact on unit trust industry in the coming year? So I'm opening up to the panel if you want to have a stab at it.
As I mentioned earlier, the unit trust company and the fund management company will need to scale up to do volume, much bigger volume, and to reach to younger people. How they achieve that will be a combination of different technology.
Correct. From the technology standpoint, right? For example, if we talk about AI, so I lump it up in A, B, C, D, right? A stands for artificial intelligence, B stands for big data analysis, right? C stands for cloud computing, D stands for distributed ledger, which is the blockchain. Despite this A, B, C, D, as simple as A, B, C, D, the technology trend on AI will be coming, but most importantly, the impact of technology must be there in order to resolve a specific business problem. If you do not have a business problem to resolve on using technology, it will always become a nice to have. So whenever we do analysis internally, we always ask questions, is this a must-have, good to have, or nice to have? So if this specific analysis or technology initiative project to resolve a specific business problem, it will become a must-have, right? So it is depending what the emerging trend. Of course, AI will be one trend, right? But if you just sing song about AI, if it doesn't resolve your business problem, you have nowhere else to go. It has to come with a business problem, addressing a specific area of needs in your organization.
Yeah, so let me take a step a bit. We have 40 seconds to answer that. So I look at it from different perspective. I look at it from customer need perspective. What your needs are, somebody will figure out an AI to fix your problem. For example, the one that I tell you just now, I'm on deathbed, I need to submit my money right now, maximum FPX 30,000, I probably got 100,000 in my account, I have to do 3 times, I don't have a lot of time, I'm going to die soon, right? For example. So this kind of AI that will do this distribution for me and figure it out at which road do I go, that could be one way of doing it. So in general, the trend will be dictated by you as a consumer and as an investor. So is there any silver bullet? Not that we can see of today, but all this generative AI, all the stuff that technology is going through is because you need it right now. So the question that we need to ask ourselves are, what do you want? Then the trend will come in. So that's just my view. With that, I think we are 18 seconds above our time. So I would like to thank Mr. Tan and Mr. Edward for being here with us today. And having a nice conversation, chillax way of doing things. And I appreciate you guys sitting in and not going in and go out and being with us. Thank you very much.
Right.
Thank you, everyone.